real estate investors, we hear about OPM, other people's money, all the time. It's like the new thing to say when we're talking about real estate investing. So what does that really mean? Well, when you buy real estate, you have 100% of the value of whatever you're buying. Okay. More often than not, somewhere around 80% of that value comes from the bank. The bank is other people, you're using other people's money. So the remaining 20% that you need, it's got to come from somewhere. You're either using your own equity means cash, or you're using OPM, other people's money. So this is what we're going to talk about. Two types of OPM. They fall into two basic categories: debt, equity. Let's talk about what that means. Number one, debt. What debt means is that you are borrowing that money. So that's like borrowing your down payment. That's like vendor financing. That's like agreement for sale. Okay. That's like using a promissory note to borrow funds from a private lender, an individual, somebody you know. Maybe somebody you don't know that well. That's debt financing. You're borrowing the money. Okay. What are the pros? The pros are you own 100% of the property because you're just taking additional debt on. The cons are the risks associated with the additional debt. You've got more exposure. So if you have close to 100% of that property financed, it means that if the property goes down in value, you're underwater, which means that if anything goes wrong and you have to sell, well, that loss in value comes straight from you. That's a problem. The second thing that makes using debt risky is now you're paying interest payments on more borrowed money. The 80%-ish we get from the bank, there's a mortgage payment involved. If you borrow more money, you have more payments. So if your strategy is cash flow dependent, it makes it a lot harder to cash flow if you're using more money with more debt. So that's OPM number one. OPM number two is equity financing. That means we're not borrowing money and then paying interest. It means that we are taking equity, cash, from a partner and giving them an ownership stake in the property. This is decidedly a little bit less risky because now you co-own the property with somebody else. It spreads the liability out over two people. You're taking on less debt and have less payments. So there's a lot of advantages in that regard. The negatives of equity financing are that you, as the leader of the property project, now have to share in the profits of that property because you split the ownership of that property amongst two people. The percentage split, figure that out with your partner. There's a lot of different ways to do that. But the takeaway is that you're sharing ownership of the property. Now you get to share the liability, which is great, but you own a smaller piece of the profits of the back end. So less risk, less ownership. When it comes to figuring out which two strategies are best for you, it does come to risk. What's your risk tolerance and what's your expected return on investment? Both make a lot of sense. Both have made a lot of people very wealthy in real estate. So depending on which one's right for you, build a strategy and a game plan around it. But for goodness sakes, if you've bought enough property that you've run out of your own cash, then it's time to use OPM, other people's money. And you're not going to be pigeonholed into one strategy. Maybe some you do debt, maybe some you do equity, maybe it's a combination of the both. But now you've got a better idea of the two types of other people's money that are out there, and you can go out and get investing. By the way, I have built my portfolio mostly with equity financing. That means joint venture partners. So I have an absolutely airtight, templated Microsoft Word joint venture agreement. And if you're going corporate, a unanimous shareholders agreement that I'm happy to share. So give us a comment about what strategy you like and follow to get more information like this. And if you want that template, hit me up with a DM so I can send you all the information.